Welcome back to Quest Means Business. And a sharp drop in Tesla's sales caught investors by surprise. Its shares closed down nearly 5%, as you can see there, lower on the disappointing Q1 numbers. Tesla's deliveries were off 8% from a year ago. That's the first drop, in fact, since the pandemic. The company is blaming production problems and Red Sea shipping delays. Tesla's challenges, however, go deeper, as its share price suggests over the past year. They include growing competition, particularly in China, and slowing demand for EVs. Colin Rusch is the managing director at Oppenheimer Co Investments, and he joins us now from New York. Colin, fantastic to have you with us. Now, I read your notes. You were expecting a disappointment in the first quarter, but you lowered your delivery estimates to 468,000 vehicles, and it was significantly even below that. How disappointed are you?
You know, it's good to see kind of a flush on the expectations here. So obviously the first quarter was very disappointing from an overall volume, but it does point to some of the production issues that they had with the arson in Berlin, as well as the Red Sea supply chain issues. But also it allows them to reset the bar for investors on both margins and expectations for growth. And I think we'll see those changes in estimates flow through on all the streets estimates here over the next couple of weeks.
You mean they'll lower them effectively? Does that have a further impact on the share price in your mind?
Yeah, absolutely. So, for a result that was as disappointing as we saw today, to see the stock only off 5% suggests that folks were expecting pretty ugly results. And so now we'll see a bottom get built into the expectations. And so our anticipation is that we'll see expectations get cut a little bit going into the first quarter results, and then start to move higher from here. And so investors will likely start to get a little bit more constructive and start thinking about buying the stock here at these levels.
So, Colin, let's explain what's going on to some degree, or help me understand, because they have been cutting prices, and that sends a signal to a potential consumer, at least in my mind, that, hey, maybe I'll wait off and hang fire buying one because prices might come down even further, and then you have a sort of waiting game. Have they got that sort of price signaling mechanism right with the market? Because I think it's all the more important before they bring the Model 2 to market as well. Do they have the right mechanism and messaging system going with potential buyers?
I think they've been working with it. They've been very tactical about how they use price as a lever to stimulate demand. And what we saw this quarter is that they had lowered prices and then signaled that they would raise prices starting at the beginning of the second quarter. And so we've seen that happen, and we thought that they would sell an awful lot of vehicles through the end of March, but the sell-through just didn't happen. And so I think what we're seeing is consumers wait for some of these newer models, with the Highland, which is the update on the Model 3, really come to market, which has some additional features. Folks are also starting to look at the FSD, which is the full self-driving, and getting a chance to take a look at that before they commit to a vehicle. And we're seeing the company, I think, learn the lessons of lowering prices does allow consumers to wait, and they're starting to reverse that trend now.
Part of the story for you and the growth opportunity is tied to what they're doing in AI and ultimately how they monetize that, Colin. What are your expectations there, and when do you really expect to see perhaps concrete noises from Tesla and Tesla's CEO Elon Musk in order to perhaps provide some underpinning, as you discussed, to the share price?
Yes, it's a great question, and I think it's important to differentiate between AI for the physical world and AI for digital assets. And Tesla, in our view, is very much the leader in terms of AI for the physical world. All of their cars are collecting data, and it's uniform camera data off of the vehicles, of both the drivable path for the vehicles, but also on human interactions on the street. And so what they're doing is really starting to train their system around how to navigate the streets as the vehicle, but also starting to collect data on how humans interact to really inform their robot program, where they're starting to look at factory workers that are automated and really moving that Optimus program forward. So for us, we think this is the early days. They've been able to monetize the FSD, this full self-driving program, in a reasonable way. We think they will actually recognize some deferred revenue here in the first quarter. But the bigger issue is around how this really starts to transform the physical world, and automating the physical world and how those programs start to come forward. I think we see some of the first indications this year, and we'll start to see a lot more of it as we get into 26 and 2027.
Yeah, and to be fair, management have been very honest about that, haven't they? Talking about sort of web-based AI training versus the practicalities in the real world and connecting the dots on that. It's going to be interesting to see what they say about this and when. Colin, great to chat to you. Thank you. Colin Rusch there.